Sarah, thank you very much for that. Thank you to the panel. Can I ask Ilaria and the next panel to make their way to the stage, please?
Yeah, sure. Ilaria.
Okay. Thanks very much. I'd like to introduce Ilaria Bonucci. She's the head of construction and real estate at the British International Investment. And this panel is the case for institutional investment in affordable rental housing. Over to you, Ilaria.
Yes, good afternoon. Thank you for joining us today. My name is Ilaria Bonucci. I'm the head of construction and real estate at BII, which stands for British International Investment. Recently changed the name. So we have a very strong focus on social infrastructure and affordable housing in particular, since we've been investing since 2021. Extremely challenging, but very rewarding, I would say. So what we'd like to do today is to make the case for affordable rental housing as an asset class for institutional investors in Africa. So this asset class is well established and worldwide with a more developed market. And so the question is that why is not the same in Africa and where a market is limited in size and depth? So why is that? Is that because scarcity of opportunities, lack of understanding of the asset class? So on top, we believe that the investment is also very impactful for society. So basically it has all the characteristics that should be attractive for institutional investors. But why is not happening? How can we make the case for more institutional investors to come to the fore in this space? So basically what we'll do is that we'll define the asset class, and then what we'll explain a bit better other markets and what we're doing ourselves. So I have a very sort of first-class panel of experts, which I'll ask themselves to say a few words about what they're doing, and I have, starting from here, Olivier Vidal is the housing finance specialist, senior housing finance specialist at the World Bank. We have Davina Wood from the Affordable Housing Institute, Paul Jackson, founder and CEO of the TUF, which is the Trust for Urban Housing Finance, and Carol Kleinans, which is the CEO of Diversity. I immediately have to say that we are investors in diversity, and therefore clearly there is we have a bias in this company. So if all of you can say a few words about what you do and why you like affordable housing.
Hello, good afternoon, everyone. It's a pleasure to be here. Thank you, Ilaria. Yes, I work for the World Bank in the global team focusing on financial sector development and housing finance. We work with government to enable them to look at the affordable housing sector and how the financial sector can help the sector to develop and mature in Africa. So for us, also looking at the rental sector and the affordable rental sector is of extreme importance, and we'll discuss that a bit later. Thank you.
Thank you. I think we've got two. Okay. Hi, my name is Davina Wood. I work with the Affordable Housing Institute, which is a nonprofit impact consultancy. Our goal is to improve housing ecosystems worldwide, mainly by trying to move affordable housing from an abstract proposition to an investable asset class. That in and of itself, I realize, sounds slightly nebulous, so sometimes I think it's useful to explain exactly what we do through examples of our products and services. So you can group what we do into four broad categories. The first would be to work directly with governments on affordable housing strategy and policy. The second would be we do quite a bit of work with development finance institutions like the World Bank, the African Development Bank, working on research and analysis projects. We also frequently serve as a transaction advisor for affordable housing public-private partnerships, typically funded through the IFC. And finally, which is probably most interesting for the crowd today, we do in the private sector, we help potential investors with market research and analysis for people who are looking to enter the space in Africa.
Hi, I'm Paul Jackson. I'm the CEO of Tough. Tough's a mortgage financing company. We're an SME financing company with a low to moderate income housing outcome. We are an in-city financier, present in all the big metros, bar one in South Africa. The metrics around our company is a book of about 4 billion rand and funded about 50,000 affordable housing units. Our entrepreneurs are typically men and women with anything between 10 and as many as 4,000 units over time. Our interaction with the capital markets is mainly bilateral and securitizations. Our latest securitizations was the first Johannesburg Stock Exchange social bond we achieved. And I suppose just a mortgage banker in a nutshell with an in-city focus. And I think it's important that we do not finance on the peripheral. We're not involved in social housing or those. We're a private sector rental housing in cities.
Cool. Good afternoon, everybody. I'm Carl. I head up diversity, as Ilaria mentioned. I effectively work for her. So we're a developer, owner, and manager of affordable rental housing in South Africa. We presently own about 7,000 units, predominantly in Johannesburg, some stuff in Pretoria, and we're quite actively looking at projects in Cape Town at the moment as well. And that book comes to about $200 million of assets under management at the moment. We really kind of firmly believe in the asset class, as we'll be discussing today on this panel. We see it as an asset class that's underrepresented in the capital markets in Africa when you compare it to the size of the exposure of the market in other, the more developed economies. So we see significant commercial opportunity in the space, but we also really firmly believe in the impact potential of this asset class. And for that reason, we've kind of built a business doing what we do, and we see significant headroom. And I guess I'm here to try and convince other people like yourselves in this room to be as excited about the asset class as we are.
Thank you, Karel. We thought probably would be useful to show a few examples. I mean, this is diversity, of course. A few slides about what do we mean by rental affordable housing. So perhaps you can take us through this. Is there one here? Okay.
Yeah, thanks. So the part of I was like bending over to see it there. I realized it's down here. So the purpose of this, I just want to take you through a couple of images to give you a sense of what the actual assets look like that we're talking about here. Because I think when one says affordable housing at a conference that is Africa focused, then there's quite a range of images that I think get conjured in people's minds. So just to be absolutely clear about what it is that we're talking about here, we're essentially talking about apartment buildings. Part of the discussion today will be around, kind of where one would build those things. Paul already mentioned they don't invest at the open periphery. There's a reason for that. We believe that location of property, as is true for any other asset class and property, factors into the quality of the asset that you end up with at the end of the day. And this is the picture. What's pictured here is a building in Jewel City Precinct. This is in downtown Johannesburg. It's something we developed about 3 years ago. In total, we've got just over 2,000 apartments in this precinct, and it's really designed to kind of function almost as a neighborhood. So we've got a primary school and a high school here. There's a primary healthcare clinic. There's about 5,000 square meters of retail, including a grocer, butchery, bakery, and all the kind of basic amenities that you need within your neighborhood. So there's a laundromat, there's a banking branch, there's a post office, and these are typically amenities that do not get provided in affordable housing developments, at least in South Africa, and I'd venture to say quite often the case, globally really. And we think that by providing these amenities within the developments, you actually create a better quality financial asset at the end of the day, because the location is more desirable, so the income streams that you're able to generate out of the asset are ultimately of a higher quality. But there's also a much stronger impact that results from the provision of affordable accommodation in these kind of environments, because it's a fundamentally empowering thing for the people who live there. So this is one of our developments, and it's kind of really the blueprint of how we as Diversity go about developing affordable housing. And I'll just show you a couple of images of an upcoming project of ours. So we've just broken ground on this. It's a project called Barlow World, or the Barlow Park site. It's in Sandton, which for those of you who've been to Johannesburg know it's kind of a main economic node within Greater Johannesburg and arguably Southern Africa at the moment for that matter. We're about 800 meters from this most central point of Sandton. And it's a site that used to be a big old logistics park that we acquired from the namesake of the site, Barlow World Logistics. And this is just a master plan showing what we'll ultimately build there. So we've just broken ground on the first 1,400 of a total of 4,400 units, which once the whole scheme is developed out, will be on the site. The first phase that we're under construction, and I just actually got a WhatsApp message about an hour ago showing our first 2 cranes that have gone up, because we've been piling for the last about a month and a half. So we finally have some cranes on site. It's quite exciting. And so what's included in the first phase as well is, again, a primary school and a high school. We think education is absolutely key, especially in this market, to include in the precinct. And then again, about 5,500 square meters of retail. So kind of similar retail component to what I'd mentioned in Jewel City right now. And then this is just a little artist representation of what the precinct will look like on completion. So you'll see, again, it's quite dense, right? We believe that in order to develop in well-located areas and still make the projects commercially viable, you do need density. And again, if you go to all of the most attractive urban environments in the world that we would like to go on holiday on and go and sit in a cafe and have a drink, then most often that's in a fairly dense place. This is just another picture of what it'll look like on completion. So that's essentially what we're talking about just physically when we talk about high-quality rental housing assets.
Very good. Thank you, Carol. So I would say that let's have a look. I mentioned at the beginning in the opening that the asset class is well established with institutional investors in other markets, in more developed markets. So, Olivier, what is the kind of size of the market, the opportunity? What are you seeing in other markets since your experience also? Oh, yes.
Sorry, we have to share the mic. Yes, no, indeed, it's I think the important message for regional institutional investors in Africa looking at this new asset class for them is that it is definitely a well-established asset class in what I would say more mature market, particularly in America and Europe. I have a few numbers here. I will try to not bore you too much, but in America, it's $4.5 trillion market global. The past just in America, the past 20 years, not only it's a big market, right? I said $4 trillion, $3 trillion in assets on the publicly listed, especially through real estate investment trust, right? When you talk about residential rental housing investment, we mostly talk about real estate investment trust, and this is a significant market in America, but also in the UK, for instance. Last year alone, I believe, institutional investors invested close to £4 billion in this sector alone. So this is definitely a mature market that has shown strong returns for institutional investors. It's an excellent opportunity for them to diversify their portfolio investment with something more stable. Residential rental is, by definition, long-term, stable income, good hedge against inflation. So just to emphasize that, yes, the opportunity for African institutional investors is that the proof of concept, I would say, have been made for a long time in other markets.
Thank you, Olivier. So basically, they're missing out if they don't invest. Do you have a sense of the market for South Africa, Carol, in terms of numbers?
Yeah, happy to. So I think it's underappreciated often just the amount of capital that is within any residential market. So, you know, it's obscured because it's not often investable by institutional investors, and therefore it's not the kind of thing that we'd typically talk about at a conference like this. But if you just take the South African economy as an example, in South Africa, there's about 7 trillion rands worth of residential property in totality, of which about 40% is occupied by people who are renting. Now, to put that number in perspective, the entire investment universe for commercial property, so retail, industrial, and offices combined, is just over 1 trillion rand. So the point is the residential asset base in economies such as South Africa, and this is the case in any economy around the world, completely dwarfs all other fixed property in terms of asset value. The question, however, is how much of it is investable by institutions the likes of pension funds. But even in the case of South Africa, if you just look at the amount of rental property that's within the affordable to mid market, that's still about 1 trillion rands worth of rental property, which again, is more than all the other investable real estate in the country. And I think, Paul, you were mentioning to me the other day over a coffee that you guys had done a similar market sizing study where you looked at the potential market size or like growth potential within the market. I think you came to a similar number.
So we did a fairly basic study to see how big is the market niche that Tufts involved in. And just as an aside, most of what we finance is repurposing of assets, conversions from light industrial or office to residential or to mixed use as well. And our figure was at least 800 billion was the kind of number that is the potential in the 7 metros that we're currently in.
So that's $50 billion if I math.
50 billion.
Yeah, 50.
That's
I'll remember to convert. Sorry.
next time. It's beautiful now. And Davina, since you've been looking at this for quite some time in different countries, for private clients and also for the AFSIC and the World Bank, what are the characteristics of this asset class, or at least what it is that you think could be of interest for potential investors?
So without going too much into the details, I would say that the inherent characteristics of the underlying asset class make it a really good fit for institutional investors. And I think Paul could probably elaborate more than I could on this, but residential rental housing has low volatility. It's naturally inflation hedged because you can just raise rents. As simple as that sounds, it's long dated and it's really easy to model out. So you can forecast cash flows and revenue streams fairly easily.
And Paul, do you have?
Yeah, I think that, the South African context is one of huge urban migration, urbanization. And consequently, the demand for in-city and inner-city rental housing is quite deep. I think the prerequisites, of course, are assuming that you've got entrepreneurs with excellent management. The rent-up periods are very, very short, and the cash flows that come out of these assets is incredibly stable as a function of the demand. What people often don't understand in our context is all the months are in the hands of the tenants, month-to-month leases. But that is its strength in that as tenants move out, those leases can be repriced. There's general repricing taking place all the time. And the sort of mark-to-market kind of mechanism is instantaneous and ongoing, and landlords can develop strategies that support stable tenant communities that tend to stay as much as 5-6 years at a time on average. And consequently, those cash flows are incredibly stable on the back of the demand and on the back of things like the imperatives around urban sprawl, the effects of repurposing existing buildings, which have enormous climate and other attributes. So, you know, we'll talk about the impact in a moment, but those are kind of the attributes, because you are using existing infrastructures, your location, your access to social infrastructure, the administrative requirements, et cetera, are really compelling as an asset class.
Can I add something to that? Just by way, I mean, I'm going to speak to our practical kind of experience in this within our business. So to kind of support the point Paul's making around the stability of the cash flows coming out of these assets. So we have one of the portfolios within our group is about 3,500 units in downtown Joburg. And it's really characterized as it's the most affordable component of our existing portfolio. And it's, I'd say, characterized by a tenant base that was representative of the people in the South African economy that were the hardest hit by the pandemic, the COVID-19 pandemic past. And so, and this portfolio is stable. It's been going for over 10 years. It was kind of at about 95% occupancy prior to the pandemic, which is what we would consider full. You know, in the long run, that's 95% occupancy is essentially full. And we saw within that portfolio, so what I want to quickly explain kind of what happened during the pandemic as an analogy for an extreme economic shock. And we saw right at the start of the pandemic, not much happened, and a lot of people weren't allowed to move, so there wasn't that move in the portfolio. And then perhaps 4 or so months in, we started seeing vacancy start climbing. So within a couple of months, our vacancy shot up to 18% within this portfolio. But you know, through slightly repricing and also just managing that vacancy, and also the brunt of the economic shock having kind of washed through the market, that vacancy quickly started dropping again and got within I'd say, certainly in under 18 months, and perhaps even with as short as 12 months, we got back to our kind of long-term stabilized vacancy rate. So I did the exercise the other day where I went and looked at what was the total foregone top-line revenue over the period. So essentially charting the area under the graph of this like blip in vacancy. And we lost essentially 15% of 1 year's worth of gross revenue in that period. And the point I want to make with this is that, you know, on the one hand is quite extreme, and it was extreme given, you know, this was hopefully a 1 in 100 year kind of economic shock. But if you compare this to other real estate asset classes and the lived experience of someone who's sitting on, for example, an office portfolio in most parts of the world at the moment, there are many people with, you know, large established, you know, blue chip office portfolios who would give their front teeth to only have lost 1 year's worth of 15% vacancy and it's over, right? I mean, 15% of revenue. You know, the structural implications of the pandemic on office portfolios is enduring, and people are sitting at 15% vacancies on an ongoing basis, many years in a row. So this point that Paul was making about the ability of the sector to reprice and respond dynamically to economic shocks, I think is a very important one.
Yeah, quite fundamental. Davina, do you want to add?
Yeah, I just wanted to add one point, which is that I also think an interesting feature of rental in these markets is how much government support you can get. It's such a needed tenure. So the potential to have a really strong partner in the local government or national government is huge. And that can be helpful in many ways. On the supply side, it can mean access to serviced, really well-located land, can mean help with fast-tracking through planning. And on the demand side, if you're able to prove that you have a large amount of households who have effective demand but not necessarily financeable demand, you might be able to get some sort of credit enhancement or some other sort of support from government to help make the project feasible and help make it improve the margins on it. So local partnerships have strong potential, I would say, in this asset class.
It's becoming more and more obvious that there is the asset class where to go and to invest. Olivier, what makes it successful? Sorry, can you?
I mean,
the characteristic.
Yeah, a lot has been said already, but it's a combination of I want to say you have a strong demand, right? Even though in Africa, governments tend to you want to please the population, so you focus on trying on not only having people access housing but also become homeowners. But the reality is that because you have a young population moving into cities, the need for rental is actually enormous. So first, it's strong demand in the African context, particularly. And then the history has proven that residential rental housing resists very well to shocks, right? It has provided better returns than most other assets. Like when you talked about residential, like it has provided much more better return than investment in shops or in commercial real estate. Even though the investment in commercial real estate in most African markets from investors in general is much higher than in residential one. So I think it's really about making all the elements are there, I would say, that should be to convince institutional investors, but for different reasons that we'll discuss later, the investment is still not there yet in Africa.
And yes, I think also the question of obviously solid demand, but developers and project managers, because obviously these portfolios are not the easiest thing to manage. And another thing we were discussing the other day was, Paul, how do we create scale? Because sometimes these portfolios are not big enough to actually attract institutional investors and take for a long time to scale them up. Is there a way to do it, which is faster than what we've experienced ourselves, if you like?
So I knew Carl's portfolio before he did, going back to 1998, in fact, where it was started by an entrepreneur, and then you got a lot of consolidation and also development within the company till you get to a kind of scale of 7,000 units that he's talking about. And I guess that the important point is that these interventions usually start with many small interventions. Tufts' book is made up of hundreds and hundreds of entrepreneurs, each with from 10 units to 4,000, mostly around the 200-300 unit mark per entrepreneur. And these consolidations take place. But I'd also like to spend a little bit of time saying, and with your permission, Ilaria, that we spend a lot of time at TUF looking at what makes our investments capital markets ready, and what kind of legal infrastructure, what kind of financing products do you need in the mortgage banking space? And Carl and I and others are starting similar discussions for diversity. So TUF is funded bilaterally and with securitizations. And when you look at securitizations in the rental housing space, your diversity is really at lease level. TUF's book currently is about 25,000 units on it. And that's the diversity you need. So you need to move from residential mortgage-backed securities to commercial mortgage-backed securities. And you have huge issues around data, around your legal infrastructure, around making sure that your treasury side of your equation is attractive to the capital markets. And whether you're a financier like us or an owner like Carl, these things are important. You've got a good operator that can service a diversified book, that you're constantly looking for opportunities to do consolidation. So I think that's important. If I can make one last point, and I'm going back a bit, Ilaria. One of the things I didn't say about rental housing is its counter-cyclical and its defensive nature. As interest rates go up, there's more demand for rental housing. We saw this in the financial crash, 2008, 2009. We've never had so much demand for housing as that uncertainty kicked in. So if you add all of that together, our experience through COVID is our collections dropped to 50% and recovered literally within 3 months to well over sustainable levels. None of our structures, any trigger went off, any covenants were triggered, or or defaults were triggered. It's a remarkable asset class, provided you spend enough time working on your underlying architecture to make the financial product in demand for the capital markets generally.
Very good, thank you, Paul. And I think before, I like to then say a few words, not a few words, many more words on impact and why we believe this is also an interesting asset from that perspective. And as we know, there is a growing number of investors that are interested in the impact they're making on society and whatever. What are the, and Davina and Karel, perhaps you can take this question, the challenges that you see in general, probably regulatory, and probably I would focus, Davina, if possible, more kind of outside South Africa, and Karel more in the South African context, because you know you've been looking at Senegal, you've been looking at Ethiopia, not specific on these, but in general, the blocks, if you like.
Yeah, I think in any market, probably less so in South Africa. Probably the biggest challenge for rental will be ongoing maintenance and operations. So depending on who, and that's an issue anywhere in the world, I suppose, but depending on who the owner is, for example, government, then your risk of moral hazard just goes through the roof. There are lots of ways that can be addressed, but I think again, the fact that there's a lack of control from the investor's standpoint, in that they may be investing in it, but they're not doing the actual management and operations themselves. That can be a little bit daunting at times. Otherwise, I would also bring up law and jurisprudence, not just existence, because in some countries, obviously that's an issue already, but enforcement. So we all know that you can't repatriate real estate. So in the face of adversity, you really need to be able to fall back to rely on the contractual agreements and your documentation. And some markets simply do not have strong enforceable contracts, and that can be because it's too politically sensitive to get into large-scale eviction or foreclosure, or the system is dysfunctional. So I think that's something to really pay close attention to before you make any moves.
So regulation is a big issue. Karel, specifically on the challenges in the market you operate in, as in South Africa?
I'm going to try and keep it as general as possible. So I think, this asset class is hard to operate. It's definitely differentiated from, for example, office investments, in that, in most markets, even most, African markets, if you invest in an office building, you can find often a local Knight Frank or a management agent that has some international presence and experience who can act as a third-party manager for you in the market. And that, generally works fairly well. That is unfortunately not something that's possible in rental housing management, because the reality of managing rental property is so onerous from an operational point of view, and also often so contextually specific in terms of the specific challenges that you're dealing with operationally on the ground. In terms of, I'll give you an example, in Johannesburg we've got a massive issue with utilities management that's very unique to the way in which the city of Joburg is operating at the moment. If you don't have a local partner that's operating that and also incentivized commercially to succeed in this, not just as a someone who's earning a fee, but actually genuinely is invested in the long-term value of the assets that are being managed, then more likely than not, your investment is not going to perform quite as well as it did on Excel when you made the investment. So I'm making it general because I think, Ilaria, the reality is that this, we could keep everyone here busy for hours listing all the various things that can go wrong in rental housing management. And this is not to say, I'm not trying to scare people off, but I think that the bottom line is you do need to partner with an local operating partner that can manage the property and has experience managing rental property in particular in the market in which they operate, and that are aligned in terms of the incentives.
Yeah, so we have established that it's quite challenging from a regulatory and local perspective. However, we're still very much excited about it also because there is a big component of impact. The reason why basically our strategy as an institution in the sector is on social infrastructure and rental housing is because we believe it has a great impact in terms of providing decent accommodation and is disproportionately benefit women. We also can achieve and try to achieve green buildings, also the regeneration of entire precinct. So there's quite a lot going on there, and since we're all professional in impact to an extent, I'd like to have your perspective in terms, what do you believe that this is important for the impact? Olivier.
Thank you. Yes, no, I agree. I think it's extremely important. But first, quickly, I think more and more institutional investors all over the world, and in fact in Africa in particular, and donors like us, cares a lot about that, right? So, but it's not that easy in the African context, particularly, to find an asset class in which you can invest where you can properly track the impact, right? The social impact, which is not really the case for residential rental housing. It's fairly simple to measure the impact. Who is living in the unit, how much are they making amounts, all those are tangible, easy trackers, I would say. So this is definitely, and you have now more and more the tools, so like social housing funds that focus exclusively on investing in this kind of assets. So I think it is, yes, I would stop there and say that it is not only, yeah, it's a very good asset class in which you invest and to be able to track the positive impact it can have on people's life, especially in the affordable rental context.
I think the impact, it really depends on what you're solving for. In the South African context, and I think across Africa, when you spell ESG, the S tends to be the biggest. And so if you look past the kind of, what are the S's you're trying to bring about? A well-located affordable impact is combating urban sprawl, it's creating urban densification in smart cities, but it's right down to entrepreneurial opportunities, the related job creation, local economic development as a whole. It also gives a huge opportunity for particularly energy efficiency and water saving type technologies coming through. And certainly my company doesn't do green finance. We do green in all of our finance. You can't get past credit if you don't have a green component. But they're quite self-evident because for a whole range of combating rising public sector or administered prices. So if you think about that impact, and the last impact that I think we all forget is the fiscal impact. What is it? The fiscus creating new developments miles away, and what are the long-term effects of that? Sort of intergenerational effects of entrenchment of poverty, huge transport costs, huge additional public sector cost to service, versus sort of a smart city, a densified city kind of focus of increased values, increased payment, decreased moral hazards, and the effect on the fiscus of that. So I think the question is, what are you solving for? And you can solve for most of these things simultaneously, whether it be green, whether it be gender, or it be local economic development, fiscal, the range of the kind of impacts that this class, asset class brings about, in addition to hard commercial returns.
Can I add a tiny something onto that?
We have to take questions.
Okay, sorry. That's a really compelling, comprehensive answer, but I want to add a little bit of like a people-centered approach about impact. In that, not only what are we solving for, but who are we targeting? Who's the target market? And it's the base of the pyramid. It's the majority of households. Rental is the dominant tenure in Africa. In urban settings, in some cities, up to 75% of households rent. And that's because they can't afford to buy for many reasons. Either their incomes are too low, irregular, informal, the cost of financing, the interest rate environment, it's all inaccessible to them. So supplying rental housing is absolutely essential and necessary. But then, to take it one step further, the second people are given adequate, decent housing, we can just see very clearly in the development indicators a very positive impact. So there are really strong linkages between access to housing, education levels, health outcomes, productivity levels. It all takes off. And it's often overlooked. Watson, other things seem to get prioritized, but housing is really, really essential and really impactful.
Do we have any questions from the audience? So they'll all be convinced about the case for investment. Please.
Yeah, I'm happy to take that. In South Africa, you know, what's defined as affordable housing is always a bit of a grey question because it differs from market to market, and even within South Africa, there's no legislated definition that says this is affordable housing. But in economic terms, I think the sector of the market that has shown the most growth in recent years has been essentially, we have social housing in South Africa, which is state subsidized, and then above that, there's the kind of the first layer of the let's call it formal affordable housing market. So these are really the lowest wage earning individuals within society. So people working in retail jobs, Uber drivers, people working in administrative positions within government, these like low wage earning civil servants and the like, and that sector has done very well in recent years, and then that kind of goes up to like the lower echelons of the affordable market, where I'm trying to convert it into USD on the fly, but it's say rentals up to $400 or $500 a month is so below that, but people who are still able to get through credit, credit vetting at, for example, our leasing department, meaning that they've got a decent track record of paying rent, they can put down a deposit of 1 month's rent, and they are earning a stable income. So that's really the lower kind of section of the market that we primarily serve, and that's also where we see the largest commercial opportunity. There are specialist players doing, for example, student housing, which is big, and I think there's a lot of interest in that on the continent. That's not where we play, but there's definitely opportunity there as well. And I think those are the reality is that as soon as you go higher up in the market, then it just thins out so dramatically. So if you're an institutional investor looking to deploy $100 million, there are very few places on the continent where you can deploy $100 million into a portfolio of, let's say, upper middle income housing, because there just aren't asset bases that are both rental in nature and that are that large and managed in an investable portfolio, whereas the affordable and mid-market housing space does offer ticket sizes of that order magnitude where you can sustainably deploy capital into, again, provided you have all the things that we've mentioned now.
Thank you. Do we have time for one last question? Or we just... No. No, I have two. Actually,
Just do it.
It's 3:35, so I probably should take them personally. So thank you very much for being with us today. I hope that you enjoyed the panel and the conclusion and discussion that we had about the asset class, the affordable housing, the rental platform. And thank you very much again, and thank to the panelists. Thank you.
Thank you.